Assalamu alaikum, and welcome to the Oasis Focus in Finance show, the show that brings you an empowering approach to managing and growing your wealth. This is the show in which we discuss all those matters that put you on the path to financial independence. Thank you for your contributions last week. The SMS line and the email address will be on screen. Remember, this is the last show, so send your questions as soon as possible. Today, I'm joined in studio by Oasis investment analysts Hassan Matala and Michael Swingler, and we are going to be discussing the benefits of offshore investments. Gentlemen, assalamu alaikum, good afternoon.
Wa alaikum salam.
In previous shows, we've been discussing the local and the international investment markets. Today, we're going to put on our seatbelts and we're going to go offshore. Now, since 1994 in South Africa, it's been very interesting for us because we've been able to work overseas, we've been able to travel overseas, and I think importantly, we've also been able to invest overseas. Hassan, explain to us from an investment viewpoint all about what is offshore investment.
Sure. I think, Shafiq, as you highlighted, the opening up of the economy since 1994 has been fantastic for all South Africans, not only from the perspective of, you can travel, you can work and the like, but very importantly as well, it has allowed South Africans to invest offshore. And that's very important because remember previously you could only invest in South African stock market or you could invest in the South African property and the like. What offshore means is it's a whole wide world that's opened up from an investment perspective. Now, if you look at offshore investments, it's a broad range out there. Firstly, you've got developed markets, you've got developing markets. So your developed markets will be your major countries and economies such as the US, Europe, your major developed economies that have been around and are relatively mature and have developed for many years. But then you've got your major developing economies, and South Africa is obviously part of the group of major developing economies. And one group of that's always mentioned, the BRICS countries. You're like the likes of your Brazil, Russia, India, China. That's obviously another big major developing market, which also presents significant long-term investment opportunities as well. So from an offshore perspective, these are you've got your economies and countries which presents significant opportunities. Now, from an investor perspective, how do you benefit by investing in those economies and those countries? Now, it's available to investors in various options. Firstly, from an equity perspective, we can invest in the stock markets in those respective countries or economies. So, be it the New York Stock Exchange in the US or the FTSE Exchange in London, those are the various exchanges. So you can invest in those companies that are listed in those exchanges. Secondly, we can obviously invest in the property in those respective markets. So either investing in direct property in those markets or investing in the listed property companies within those respective economies. For example, in the UK, we can invest in a property company that gives us exposure to, to high quality shopping centers. People may be familiar with Covent Garden, those type of centers as well. So you're getting exposure to that as well. And I think lastly, obviously, it's investing from an income perspective. So investing in, for example, Islamic bonds or sukuks issued by the UK government or issued by Turkey and the like. So you're getting a chance to invest in those type of instruments as well from a global perspective. So I think various options available, but I think from a ordinary investor perspective, a very simple way to invest generally tends to be your unit trusts or your collective investment schemes. And that always presents a very good opportunity to invest in the offshore market.
Michael, as South Africans, why should we invest offshore? And secondly, what are the benefits?
The simple answer, Shafiq, is really about diversification. So offshore investments significantly increases the diversification. And the reason for that is because you're investing in different assets that have a lower correlation to each other. If I can give a few examples, if you invest in different regions or countries that are at different economic or development cycles, you're getting correlation in that way. A few more examples, you can invest in regions or countries that are leaders in a specific sector. If I use technology, or the healthcare sector as an example. Then also, as Hassan has already alluded to get exposure to the major global cities. And again, these major global cities have got their own dynamics and economic drivers. One can use the global listed property companies. And then lastly, and quite importantly also, is currency diversification. So for South Africans who have a significant portion of their investments in South Africa, there are significant diversification opportunities by investing in assets that have got lower correlations to the existing assets in the portfolios.
Just to add to Michael's point on that as well, if you look at, in fact, those asset classes that Michael's highlighted, being equity and property as well, if you look at global equity and global property returns in hard currency, but also importantly, if South Africans are looking at it also from a rand perspective, relative to inflation over the last 20 years, they've delivered good returns over the long term. In hard currency, but also in rand terms, relative to inflation, it's delivered good returns over that period of time.
Okay, Michael, you mentioned previously in the show that you have different economies at different phases of development, and you used the word correlation. For us normal people, what does the word correlation mean in the context that we're discussing it?
Shafiq, what we are looking for in terms of our research and what our investment team focuses on is identifying companies that will generate sustainable cash flows and companies that will generate good long-term profits, growth and returns. So if we look at having different investments that will perform at different times or have different drivers, it's really the drivers of that underlying cash flow and profitability of the companies that we are investing in that have a low correlation. So for example, one country might have a relatively old population, and in that country or region, you might find that the healthcare companies would be at a phase where there's a stronger demand for their product, and therefore those companies will generate stronger cash flows and profits, irrespective of what happens to the global economy. Another country or region might have a much younger population, and there, for example, you might find stronger demand in the consumer sector, where you've got a younger or urbanizing population, where you've got growth in disposable income. So having these different investments, the point I was trying to make is that they have different drivers, and therefore the overall correlation in the portfolio is lower.
Hassan, something else that comes up, we operate in a very strictly regulated environment. So how does one cope with this as a South African? How do we deal with it?
Sure. I think if you've got to put it into perspective as to, when the economy opened up, there obviously had to be rules and regulations put in place in terms of how we take our money offshore. There was obviously, the government wanted to make sure that there was, an orderly manner in terms of making sure people taking their money offshore, and not a flood or the like of wanting to take your money offshore, doing it in an orderly process. And you've seen over the years, over the last 20 odd years, you've had a nice improvement in terms of the amount that you can take. In fact, now in the last budget that we had this year, earlier this year, there was an increase in terms of firstly the foreign allowance for an individual, where you're allowed to take from, previously the limit was 4 million rands. Now a South African individual can take up to 10 million rands per year offshore. So that's your foreign allowance, where, every year you can take up to 10 million rands from this year onwards, you can take it offshore. The other one, obviously, to put into perspective is when you're taking your money offshore, though, there are certain aspects and rules that you need to comply with. Firstly, making sure that you've got a tax clearance certificate. It's important. You need to make sure that you get your clear, so that you are given the clearance to take that money offshore as well. Very importantly, though, this option of 10 million rands is only available to individuals that are 18 years and older. So you obviously, to qualify for that, you need to obviously be an individual from that perspective. I think a very other aspect to look at as well is that individuals or the listeners out there should also not be confused by the fact that when you're traveling offshore, you're actually given a separate allowance to that. So this is your foreign allowance from an investment perspective, where you're taking your money offshore to invest, be it, you want to invest in the global equities or global property and the like, you're taking that money offshore. When you're traveling in terms of, many of us either going for, especially now this month we've seen many people going for Umrah, in fact in a few months time going for Hajj as well, they will be taking, you're allowed R1 million per year to take offshore from that perspective. And that is, that's regarded as your single discretionary allowance, where you can take money offshore, R1 million per year in terms of spending and, buying gifts and the like. When you go offshore, you will spend a bit on yourselves and your family and the like. That's a different allowance. And that's obviously, so in total, essentially, you've got your 10 million foreign allowance, and then you've got your R1 million discretionary allowance, which you essentially use towards your spending on your travels and the like.
Michael, these two allowances, can they get mixed up? I mean, can I use that R1 million allowance for investment, for example?
No. And I think, as Hassan has alluded to, they also have different requirements. So when you're talking about the discretionary allowance, which is your travel allowance, that's a relatively simple process. Again, being older than 18 years, that R1 million per annum. But here you don't need pre-approval from the South African Reserve Bank. And as you would know, you would need certain travel documents and identification documents when you approach your authorized forex dealer. But the investment allowance is a more formal approval process. And as Hassan indicated, it's very important that the administration and the process is done appropriately.
Right, let's just quickly keep that thought. You are watching the Oasis Focus and Finance show. In studio with me, Hassan Matala and Michael Swingler, Oasis investment analysts. We're going to take a quick break and we'll be back after this.